Our next panel is going to be a super interesting one. It is titled The Bitcoin Treasury Companies, all caps, all the way across. It is going to be moderated by the incredible, the indelible, Pierre Rochard of the Bitcoin Bond Company. If you haven't seen the video that he put out where he is fact-checking the BS about carbon emissions and Bitcoin mining, it's absolutely incredible. Don't leave the theater yet, but immediately after this panel, go outside and watch it. It's absolutely hilarious. We've also got Matt Prusak of the American Bitcoin Company. We've got Shahan Khoshafian of DPI Capital. We've got Kyle Schneps of DCG. And finally, we have George Karam of Sequans. Please put your hands together for the Bitcoin Treasury Companies.
Well, thank you all for joining us today, and of course, thank you to the great team from George Washington University and from Swan for putting this event together and bringing us all together to discuss what I think is the most interesting topic in the world, Bitcoin. And today we're going to kind of zoom in on a nascent part of the ecosystem, or at least it feels nascent, but it has been growing by leaps and bounds over the past, let's call it 18 months, Bitcoin Treasury companies. But before we get into it, I'd love to get introductions from our panelists. They come from all four very different walks of life and different parts of the industry, so it'd be great to kind of hear a short, very short, concise biography and kind of what your role is in the ecosystem. And Matt, we'll kick it off with you.
All right, everybody. Matt Prusak here. I'm the president of American Bitcoin. We are a Bitcoin accumulator, so we took the best parts of a mining business and what we believe to be the best parts of a treasury business, and we've combined the two of them. We launched April 1, and we actually went public in early September, so it's been a busy month. Very excited to be here with you all.
Congratulations.
Cool. I'm Shahan Khoshafian, general partner at DPI Capital. We are both a Bitcoin-focused VC, and now we're moving into the digital asset management space. So a lot of the work we did on the VC side of things was to make Bitcoin productive, and now these various groups want us to work with them to manage those assets. So very nice to meet you all.
Yeah, thank you for having me and for listening. My name is Kyle Schneps. I'm Director of Public Policy at DCG. DCG is one of the earliest and largest investors in the Bitcoin and crypto ecosystem. And we have several wholly owned subsidiaries, two of which are Foundry, which is the largest Bitcoin mining pool in the world, and Fortitude, which is a private miner. Happy to be here and look forward to the conversation.
Thanks.
Hi, everybody. I'm George Karam. I'm the CEO and founder of Sequans Communication. Sequans, we are a fabless semiconductor company building cellular connectivity for IoT. And recently, in July, we launched our treasury. And we already finished the first phase of implementation of treasury, accumulating more than 3,000 Bitcoin. We'll have more time to talk about, I'll say, the treasury aspect, obviously, and the impact of our business, the core business, to the treasury.
Yeah, awesome. So looking back on the kind of the emergence of this we could trace it back to Fortress Investment Group. Actually, in 2014, I think they put Bitcoin on their balance sheet. That was short-lived, and it became what Mike Novogratz built with Galaxy. And then fast forward to 2020. Mr. Saylor put $250 million onto his balance sheet and kind of stumbled into this new business model. Over the past year, we've seen, I think, dozens of new Bitcoin treasury companies globally of all sizes, some of them, but none as big as MSTR, but of all sizes, and also just different jurisdictions, different business models. So I'm really curious to hear from each one of you, why do you think that this trend has really accelerated over the past 12 months of Bitcoin accumulation on corporate balance sheets? Let's start with you, Matt.
Sure. So, it's interesting if you go through that history that you mentioned. One of the things was the idea that initially there was not an easy way to gain exposure at all in the equity markets. If you had a Coinbase account, you could go buy some spot Bitcoin, but for the everyday American, it was pretty hard to get exposure. Saylor was really sort of the first out of the gate in a big way with that. But what he did that was also quite interesting was he really forged the path for financial vehicles that accumulate Bitcoin. And what I mean by that is an ETF, which didn't exist at the time, it exists now, is really a one-to-one with your investment. What Saylor was pioneering that some of the other companies in the space have now also gone into is how do we give you more Satoshis for your investment over time than you would have perhaps had if you just bought spot, right? And so that is a sort of a Bitcoin standard type company that's fairly novel, and people are doing it in a diverse array. I mean, we mine, folks are doing other things as well, but I think that to me is one of the things that's most exciting about the Treasury.
Increasing Bitcoin per share.
Correct.
Is kind of
BTS.
Shahan, how do you see this acceleration?
Yeah, so I think if you look at it, getting into Bitcoin, the onboarding process is extremely difficult. So think about a seed phrase, your wallet, a hardware wallet, then you hear all this news about it. You don't really know what to do. And then if you're from the traditional finance side of the world, you look at this industry and you see the memes and you see X and you see all the stuff that's coming out, and you're kind of scared of this industry and you don't really know how to approach it. And so I think what Bitcoin treasury companies, the rise of them, came about because people didn't know how to gain exposure to this asset class by doing things on their own. So these are different vehicles that traditional finance could use to gain exposure to this industry. And I think we'll talk about this a bit later, but there could be too much of a good thing in terms of Bitcoin treasuries, but it is a good first step for traditional finance to gain exposure to Bitcoin, and for the industry to gain exposure in a place where self-custody is not needed. You don't need to know your wallet. You don't need to know all the technical details. You can have these experts and these different managers kind of take care of that process for you.
So basically that self-sovereignty is great for people who are interested in that, but then when it comes to financial returns, they're looking for traditional Wall Street products that are powered by Bitcoin.
Yeah, because anybody can go out there and buy Bitcoin and self-custody that Bitcoin. You can have different groups that do that. I mean, there's a whole separate discussion we can have around custody because there's these qualified custodians, but if you really look into the hood with some of this stuff, it's not managed the best way. And so there are different treasury companies that are doing self-custody. They have different security provisions and things like that. But yeah, certainly, I think this is very much the traditional finance way of getting exposure.
Awesome. Kyle, is Bitcoin being co-opted by Wall Street? Is that how we should read this, or what direction is it going in?
I think there's an element to that, and but I think that I think one of the catalysts, as the token policy guy on here, I will say one of the catalysts for this expansion has to be a more friendly policy and regulatory environment to this type of company and to the treasuries and to the asset class in general. And after the 4 years during the Biden administration where a lot of companies felt on edge or disadvantaged, either with being debanked and other things, there has now been this sea change that everybody can sense palpably, and I think it leads to a lot more openness to embracing the asset class as a business and not worrying about any sort of financial or economic stigma that may be understood on Wall Street.
All right. George, from kind of a global lens, how are you seeing this evolution? We've seen, so Sequans is listed in the United States as an ADR, and you're based in Paris, in France. How do you see these two worlds approaching Bitcoin and Bitcoin treasury companies, the European and the American lens, given the changing regulatory environment here?
Well, obviously, I mean, in Europe, I believe it's lagging, obviously, all what we are seeing, all this in France. In terms of treasury, I believe in France we have another one other than Sequans. We have only two companies there, Capital B and Sequans. I'm happy to see all. If you ask me, even my personal experience, I was tracking Bitcoin for a while from technology point of view, but I was always, watching the big risk, which is the regulator. What the regulator will do on all this, and if one day you wake up and someone will tell you cannot use it anymore, or you cannot. And honestly, this year was a big year of change in the US. And we see this like the US is leading the world from this angle, and hopefully Europe will follow. We are not there. I believe Europe's still, reluctant and moving slowly on this. But hopefully with all the changes in the US, now it's going to, because even we'll start seeing European countries talking about even building themselves their treasury, using the Bitcoin and so on. The adoption is becoming more commoditized in Europe.
Yeah, really interesting. So with this explosion of activity, do you think everybody's going to win, or are there going to be winners and losers? What's going to differentiate the companies that endure versus the ones that maybe don't survive the cycle or two?
Yeah, it's a little bit like there was a Cambrian explosion where a bunch of life appeared on Earth, and then later there was a meteor that wiped out a lot of that life. Like, I think you're going to see, obviously, quite a few companies start to do versions of this strategy. Now, over time, some of those attempts are going to be stronger than others, and I think there's going to be a flight to quality as people get more sophisticated. It's true with Bitcoin mining or really any industry. And so, broadly speaking, I'm bullish on what this will do for Bitcoin as an asset class. But we may take the scenic route and the upward ascent, obviously, as folks learn the ropes on what this means for the sector.
Is it all going to be driven by the Bitcoin price, or do you think that there's other catalysts that are going to help treasury companies?
I think M2. So
yeah.
Bitcoin price itself is maybe driven or related to a few other things. So global monetary supply being one of them. Risk on assets. Sometimes Bitcoin wants to be like gold. Sometimes it wants to be like QQQ on Nasdaq. It's interesting to see that interplay. Obviously, it's decoupling in its own way, and I think we'll see a continued decoupling.
Shahan, how do you think investors should approach the question of maybe valuation or even relative value of these new treasury companies? What should they be looking out for?
So the first thing I would say is all treasury companies are not created equal. And I think that the way to kind of look at this is, what is this team, what is the strategy that this group of people have in place for a bear market, for a bull market, and what are the different ways in which they can accumulate Bitcoin and then take on those downturns? Because as you guys know, Bitcoin is extremely volatile. It's easy to talk about a treasury company when the price is at 120,000 or whatever, but when Bitcoin drops, I hope it doesn't, let's say down to $85,000, then you're in a really tough spot. How are you going to raise money? How are you going to convince additional people to get involved? And so I think one of the ways to kind of evaluate Bitcoin Treasury 2.0 is some of the stuff that we're working on at DPI Capital, is to find different ways in which you can earn Bitcoin yield and Bitcoin denominated revenue through various different things. So for example, they have Bitcoin mining at American Bitcoin. We're working with this group called Arch Network, which created the first Bitcoin application layer, which essentially creates a lot of the primitives you see in other crypto projects, like a decentralized exchange, borrow and lending, different perps markets, things like that. These are all yield opportunities, because think about each one of those dApps using Bitcoin as the gas to run those transactions, or the fees to run those transactions, and that is fed to the Bitcoiners on that Arch network. And so there are various other things, like CJ is going to speak later, from People's Reserve, which has Bitcoin-backed mortgages. So there's a lot of different ways in which you can build up this treasury, not by simply buying the Bitcoin, securing the Bitcoin, raising money, issuing debt, whatever you need to do. There's another way to do this where you can have real businesses generating Bitcoin, and that's a way you could potentially accumulate that Bitcoin.
Interesting. Kyle, do you think one of these companies is going to get over leveraged and blow up and attract regulatory attention?
I certainly think we can eliminate it from the realm of possibility, right? And I think it will matter. Any sort of contagion effects may affect our ability to educate policymakers. And, I obviously talk to a lot of folks, within our own organization who are focused on the business, and they try to plan ahead. What if there's another crypto winter? What if something happens? And we do the same in policy. And in fact, at least if you have a good team, they should be red teaming what happens when our policy support dries up or there's no money for PACs and donations. What happens, when you are sort of the redheaded stepchild in DC again? How do you plan for that, and how do you utilize your resources? And it's one of the things that we have to account for. And one of the ways I kind of separate the treasury companies in my mind are, hopefully there are high conviction, long-term players and who are great actors, and we have to be able to separate them from if there are some opportunistic actors, especially if Bitcoin goes higher and if this turns into more of a more and more companies doing it. We want to make sure they're doing it for the right reasons. They have long-term conviction, and not that they are just doing it for a quick buck and then they're going to dump or rug pull.
Do you think though that given the SEC's robust disclosure requirements, that it's kind of hard to be a bad actor and for people not to see through that? At least that would be my perspective. Do you think that there's sufficient disclosure requirements at this point to prevent that, or we're always going to see it anyway?
My perspective on that would be, I would never advocate for the SEC to do more.
Yeah, fair enough.
From this perspective. No, I think there are adequate disclosure, but I think for the long term, you want things that, somebody's conviction in Bitcoin, a company's conviction in Bitcoin is something that I think can't be revealed in the SEC's disclosures.
Yeah, George, how are you seeing in Sequans kind of the opportunities that y'all are pursuing, and then the risk management that comes with that?
Yeah, I mean, to jump on the questions, I mean, I believe, we are, in a phase where every company is trying to figure out, to learn the process, right? I mean, you're copying the model. You have seen something that worked out over 4 or 5 years. I was interested listening to Saylor saying the first $1 billion idea and the second and so on. I could add essentially, I mean, you learn as well by not inventing yourself what you have to do, by watching what's going around. But there are some key elements to this treasury. First of all, to be responsible of what you are doing. I mean, if you are taking too much risk by accumulating to accumulate, and then you face the story of Bitcoin, you need to factor this in. Bitcoin can, go down, and maybe for 3 months, 6 months, you will have to suffer this. If you are building your strategy where you cannot sustain this phase, then you're dead in advance. But there is also the other element, which is the scale. And at the beginning, what's happening today, you have a lot of money coming in, and definitely dozens of treasury. And this is distributed over many guys. And I'm not saying we have a lot of treasury, because there is a lot of money and you can capture more. But definitely in this transition or this phase, you need, some of them will not reach the scale, and then you could see consolidation that we start seeing happening. So the industry will figure it out at the end of the day to have the size where it can start working. And then it depends as well, the third element I would like to mention, every company has its own characteristic, what you're doing. If I take it to Sequans, I mean, we have a core business, which is semiconductor. We're building this treasury because we believe in Bitcoin, strong belief in this. And obviously seeing that this worked out for Saylor and why you don't do it, and that's how you adapt it to yourself. But then at the same time, you have, for example, the option of monetizing your business, running your business in a different way. Honestly, I should say, 6 months back, I will not run my semiconductor business the same way I'm running it today. Today I could be working on KPI of semiconductor. Today I'm working on the KPI of Bitcoin. I'm working on the cash. You see my point, negotiating a deal with the customer today on my semiconductor. I'll think about the terms of payment much more than before, and less to some extent even on the margin. And the two, I believe, in a phase for Sequans today, we have strong core business today, which can be monetized and bring a lot of money in comparison to what we have on the Bitcoin. And the Bitcoin, we have a good size, but not the scale that I would like to see next year. And we need to work all this out to reach the scale, and from there be able, I would say, to to continue to the second phase and third phase.
Matt, in the mining industry, there's miners that they sell whatever Bitcoin that they mine. What do you think it is about the accumulation part that is really important for mining companies and kind of makes them different from other commodity miners?
Yeah, I think it's what the investor wants. I think investors in today's world really want exposure to Bitcoin accumulation, right? And mining is the de facto way to gain any kind of yield in Bitcoin. Running Bitcoin mining is a pure energy arbitrage where you mine it and immediately sell it. If you're smart, that can make money. But the way that you're going to be valued might be different because it's really going to be a multiple of that energy spread. Then in a Bitcoin-centric world where folks may want to put a premium or some torque on that because they know that you're storing this energy value in the hardest asset imaginable, right? And so over time, you've seen a shift. There was a period of time where some miners really went for the energy angle. I think we've been really stressing that we have high conviction on the asset. We're not going to sell. I think with the advent of AI and high-performance computing, HPC, some folks are going back towards the energy angle. I think when Bitcoin rips, they're going to go back towards the Bitcoin. I mean, you see how this plays out, right? Yeah. So it's an interesting paradigm. But for us, the North Star remains Bitcoin accumulation, and it keeps it very simple.
Yeah. Shahan, how do you see the importance of the operating business part of a treasury company? The strategy, when they launched, the ratio between their Bitcoin business and their software business was much closer to a balanced, one-to-one. Today, it seems like it's 99% Bitcoin if you look at their income statement and the unrealized gains. Is it becoming less important to have an operating business, or how do you see it?
I think the way I would look at it is just like there's Bitcoin and there's crypto, there's Michael Saylor, and then there's the rest of the treasury companies. So,
Shots fired.
Yeah. Michael Saylor is in his own category. So I would say his ability to raise money, to get attention, to speak, to do all these different kinds of things. He's a much different kind of voice in this industry. I think a very important voice. But I think that is a good point. I think there is going to be a mixture of those things, and there should be a mixture of those things, where you have this software side of the business, and then you have the Bitcoin accumulation. The piece of this I think is still missing is like real world use cases where Bitcoin is used and processed in businesses, in the way that you do things, in onboarding people. So I think that if you want to differentiate yourself as a treasury company, you should maybe lean into those sides of things, because there are people who want to enter the industry. They just don't have the tools. They don't have the rails. They don't have the software. It's the worst user experience to deal with a lot of the things within Bitcoin and crypto at large. It's very difficult to onboard new users, and some people just get frustrated and they just leave. So I think what these different treasury companies can focus on is making that user experience a lot easier and creating these software tools and different pieces so that you can onboard those next set of users or just enable new groups of people to get involved in treasuries.
Yeah, really interesting. How do they, because like one of the challenges with onboarding people onto Bitcoin is that by design, it's set up so that it's open source, it's permissionless, very thin profit margins for example, wallet providers. They end up having to really go full stack and do KYC AML and enable like dollars to Bitcoin conversion. So do you think that the treasury companies are going to become more active in building those bridges, or are they going to stay focused on kind of the financial engineering aspect of it?
Yeah, I think they will. I mean, this might be unpopular here, but I think something that's definitely going to emerge in Bitcoin is Bitcoin DeFi, right? And I think that's going to be enabled by, there are various ones. I like Arch Network and their Bitcoin native application layer. What you're going to allow to do is if you can get creative, right? If you look at Ethereum, Solana, and whatnot, you have Aave for borrow and lending. You have Uniswap for decentralized exchange. And there's various other things like Pendle that's, for example, coming out where you have the principal token and the yield token, and there's ways to decouple these things. There are liquidity pools that you could put two tokens in to gain yield and things like that. When there is this Bitcoin native set of applications that exist in other crypto ecosystems, this will be a differentiated way in which you're going to be able to gain yield. And I think if you're smart and you look forward, that is probably a direction that you can go that many of these treasury companies do not have the education, are not enabled, and don't have the experience to do at this time.
So I think a lot of Bitcoiners, they probably get an allergic reaction when they hear Bitcoin yield because of what happened with Celsius and BlockFi and all the others. How do you think this new generation learned from that experience?
I think self-custody is very important. So like if you look at this application layer that exists, you're not trusting a counterparty. You have self-custody over your tokens, the different applications that you use. And I think that's really important because Celsius, BlockFi, Voyager, all these different groups, essentially what happens, and a lot of us got burned in those kinds of things, and it's understandable. Where they get yield and how they get yield makes sense, right? But the way in which they operated their business did not. Because essentially when you're borrowing, you're selling things, you're trading things, you're creating liquidity pools, those are all yield opportunities. However, if there's shit coins all over the place and those collapse, and those are some of the ways that you're going to produce yield and distribute that to the customer, everything cascades with it. So I think the difference with some of these different Bitcoin application layers that are coming out into existence is that you still have self-custody. Now, there could be a group that does the self-custody and all that stuff on your behalf, but still the core concept, the core ethos of it is your keys, your coins, and you move the coins around as you please.
Yeah. George, your Bitcoin on Sequans' balance sheet, those are in cold storage, or are you earning yield on those? How do you think about the risks there?
No, for the time being, they are in cold storage. We raised we have half debt, half equity, and for the time being, we have the 2x to maintain the 2x collateral. So we're thinking, and I agree with that things can develop, and you will look how to create yield around it and so on. We're not at this stage yet. I mean, what we have today we're playing with the role of the game. We started the first phase, and for the time being, we're not able to generate yield on this. But again, you need to look to this depending, about your goal and what's the risk, how to generate cash. At the end of the day, it's sort of cash flow all the time that you need to guarantee in any way, no matter what's happening to make this treasury working. And we had a lot of discussion on this. We're working with Swan, as you know, we're partnering with Swan. I agree with your point about as well, like you can get the strategy because at the end of the day, all what you need is a public company. No matter what you are doing, you can get this, right? I mean, as far as you have investors willing to support your deal. But from there, how to manage this, you need to change as well the culture of the company. I mean, if you take, for example, Sequans, I didn't have any guy, even if I consider even myself, I was far away from doing, I would say, financial services or financial engineering, other than obviously I raised for many, many years on the public market and so on. But if you put me and the CFO on his side, there is no one in the company who's ready to attack this treasury. So by definition, you need to have a new team for this. Now, obviously, whether you partner, whether you hire, you do whatever you have to do. For example, in the case of Sequans, it was Swan as a partner was part of our deal from day one because we knew that we want experts and people they know what we are talking about to support us and help us in this phase.
Yeah. Matt, on your balance sheet, how do you think about leverage? I'll say I'm not familiar with your balance sheet, but I'm curious to hear kind of your thought process there.
Yeah, we very careful. So historically, I was at a company called US Bitcoin Corp, and then that merged into Hut 8, which is now a major infrastructure company. And then I was the cleanup CEO for Celsius, the restructuring. So I'm intimately aware with the yield issues that they faced. What I would say is that, yeah, a little bit of leverage responsibly is great. The issue is you need to be content as an executive. Someone will outperform you with more leverage. That's just the math, right? If they took on more risk and took on more debt, their number will go up faster. And that's great for them, and they'll get a gold medal for that, right? But Bitcoin has always been volatile, and the timing and the duration is a tricky thing, and that tide can swing out quite rapidly. And the delevering can be very painful for folks that were maybe a little too exuberant in the high end. And so we've always been content not to let the ego get in the way of building a firm business. I mean, you've got an asset class that grows over 30% a year every year consistently, you know, mostly consistently, right? And that's the key thing. And so when you try and put some juice onto that, you can live to regret that very much. So we're pretty conservative.
Yeah. So, Kyle, it feels like we haven't heard from Elizabeth Warren in a little while about Bitcoin mining and carbon emissions. She used to send letters prolifically. And is it because AI HPC has kind of eclipsed that, or just the voters are not interested in it?
There could be a little bit of both. I mean, we certainly saw, in terms of voters, this is something 2 years before the election, I had an op-ed in CoinDesk talking about how this is an important issue, and in elections where it's always tight in a divided country, you want to get any vote you can get. And I noted that candidate Trump at the time, former President Trump, candidate Trump, was unusually quiet about it. And that may mean that he's considering, because in the past he had been sort of anti-crypto. But I think that it was seen as maybe a losing issue, because there was a lot of young voters who see Bitcoin as their access to financial inclusion, to a financial system that, you know, maybe they feel a little excluded from Wall Street insiders, and this is something anybody can access. So there was that element. I think that you also hit the nail on the head with the AI aspect. AI data centers have become so massive and so needed and have such political tailwind, bipartisan political tailwind, that Bitcoin data centers, by comparison, are kind of a blip. And so it's hard to, in one hand, support a massive AI data centers that use much more energy than Bitcoin mining, and then condemn Bitcoin. So there's a little bit of a contrast there that I'm sure Bitcoin skeptic politicians don't want to get involved in. Now, that said, there's also great arguments that we've been making to policymakers for the past year, specifically that if you want to be competitive in the global AI race and the race for energy, you might as well take advantage of this incredible technology that is Bitcoin mining, that can not only bootstrap up new energy, or bootstrap up a data center and make it more profitable as it's growing, but can then potentially also be converted, as we've seen many times, converted into larger, larger data centers with a lot more specifications. And so I think that they've come to, a lot of folks, after hearing this message many times, have started to realize that Bitcoin mining can be an incredible gateway into data centers, energy, and global competitiveness.
Yeah, absolutely. One of my theses for this nascent Bitcoin treasury industry is that it's going to be so successful, it's going to attract so much capital to it, that the complaint will shift from Bitcoin mining consumes too much energy to Bitcoin treasury companies consume too much capital, and that they're taking away capital from productive uses, like college degrees that are useless, or McMansions and all of this. So, and this kind of bloated private equity industry at this point. But do you think that the industry should be proactive and start educating lawmakers about what the treasury companies are doing, what kind of policies would actually be constructive, or should they be reactive and kind of just wait for the letters to come in from Elizabeth Warren?
We have certainly learned over the past 4 or 5 years that we cannot be reactive. We have been caught at the state level, we have been caught at the federal level of not having, professional policy people, where companies, maybe there's a problem in a state, or there's a problem, and then we end up like these companies dump a ton of money on private lobbyists who have no understanding of what the technology is and have to learn it all. And so we have seen the public policy arms of all sorts of companies across the industry become much more sophisticated over the past 4 years. There's no doubt about that. And also being the targets of certain policy discrimination of the past 4 years, there was a sort of industry cohesion that resulted in sort of the great results that we're seeing now. So with that said, I'd say it definitely pays to be proactive in trying to educate policymakers of why a company would be a treasury company. I think that every company that does it, getting back to conviction, needs to know why they're doing it exactly. And that would go a long way. And being able to have folks like, leaders of companies come to DC, explain why they're doing it, will go a long way, and explain how they're maybe bringing access to the constituents of those policymakers, which to me, at the end of the day, is what Bitcoin's about. It's about bringing access to people who would not otherwise have access to long-term sustainable wealth.
And what do you say to the, and I'll count myself among them sometimes, the paranoid libertarians who say the government's going to seize these honeypots of Bitcoin? Do you think that that's a reasonable concern, or is it a little overblown?
So I get the fear. I think it's overblown in terms of a sort of violent or quasi-violent seizing of a company's assets. I think that is totally messy. I think it would not be something the government would do. However, if we were to enter some sort of national security imperative where the government decided that Bitcoin was integral to the U.S. national security, I think we'd see more of a move where a company like Strategy or a large Bitcoin treasury company could be, through various offerings of carrots and sticks eventually too, to become more like a Lockheed Martin, where you are offering so many services to the government. The government is such a large client that it's almost enmeshed. And there could be some benefits to that. There certainly could be some disadvantages, but I would much more, if I had to think of a pragmatic result of that scenario, it would be more of that, where the government is partnering with that large private treasury company for a wide variety of reasons, so they don't have to own the company, but they can have access. I could picture folks at Strategy all having security clearances. It's very possible. I think that is the way the government would operate, as opposed to a hostile takeover of assets.
Really interesting insights. Thank you, each one of you, for joining us on this panel, and thank you, the audience, for joining us today.
Longer, more applause. This was an incredible panel. Thank you so much, gentlemen.